is taxable and all the other subsequent sales are exempt from tax. But in order to enjoy exemption, what is needed? Some conditions have to be satisfied. What are the conditions? For example, this particular sale is subject to CST. This is subject to CST. Now subsequent sale is exempt. So A to B is taxable, B to C and C to D are exempt. There is no CST in this case. But in order to enjoy exemption, what are we telling? We are saying to B, you are the second seller, you are asking for exemption. So we will put some headache on you. What is that headache? Concentrate now. First sale was taxable, subsequent sale is exempt. So what are we telling to B? If you want exemption, obtain two forms. First ask for E1 form from the previous seller. What kind of form is this? This form will tell that the first sale was done by A and A has already collected taxes on this sale and it has gone to the government. All the details will be given. So E1 is a declaration that the first sale was already taxed. He should obtain and keep it with him, because tomorrow if the officer is asking why did you claim exemption, he can show that these goods were already taxed at the previous stage. Then in addition to this, we are saying from your buyer, you please obtain C form. Okay, and this buyer should be a registered dealer. Okay, your buyer should be a registered dealer. This subsequent sale exemption will apply only when the sale is happening to a registered dealer. If it is happening to end consumers like us, there is no exemption, there is tax on it. Okay, because end consumer has to pay the tax. This is a topic, like see I gave you example in VAT. First seller is manufacturer, then it goes to distributor, then it goes to wholesaler, then retailer, then finally the consumer. So here also we are talking about subsequent sale where the buyer is one of those fellows, wholesaler, retailer, distributor. He is not the end consumer. He is buying with an intention to sell. Therefore we want to give him exemption. He is not going to consume. So he should be a registered dealer. How do we know he is a registered dealer? Only when he gives a C form, it means he is registered. You and I who are end consumers, we can't give C form. So that means we can't enjoy exemption. So we are asking B, if you want the second sale to be exempt, bring two things. From the previous seller, bring E1. From your buyer, bring C form. Okay, this will be exempt. Now second seller, let's assume he is a wholesaler, he is a distributor or somebody. Now this fellow, wholesale dealer, selling goods to a retail dealer in Gujarat. Subsequent CST sale, again he is asking for exemption. What should he get? He is asking for exemption, C to D. C wants exemption, so we tell to C. From the previous seller, bring one form. Bring one from E2. E2. Okay, why E2? E1 was given by that person who paid the taxes. E2 is given by that person who is claiming exemption on the basis of E1. So you bring E2 because E2 will tell us how did that fellow claim exemption. Bring E2 from him so that you enjoy exemption. And in addition to that, who's buying? Another dealer. So this fellow should be registered dealer. So what should he give to you? He should give you C form. So now let us summarize. First sale is a CST sale. It has suffered a tax. The first sale can be 3A or 3B. The subsequent sales are 3B sales. And we want to give exemption. So we are putting some conditions. What are the conditions? The one who wants to claim exemption should obtain E1 from the seller and C form from the buyer. If it is second stage, then we will say E2 from the seller and C form from the buyer. Like this, if you submit the appropriate forms, subsequent sales are exempt from tax. So because this is a complicated topic, we will write down few lines on it with the heading every sale in the course of interstate trade. Every sale in the course of interstate trade is liable to tax. The levy can become multiple levy, in brackets you write double taxation if goods change hands several times during their movement from one state to another. Okay, so let us write down section 6 subsection 2. Section 6 subsection 2 provides exemption. Section 6 subsection 2 provides exemption to subsequent sale. If the following conditions are satisfied. First one, there must be an interstate sale. By a registered dealer to another registered dealer. Point number 2. During the movement of such goods, a second interstate sale by transfer of document of title should take place. Okay, second interstate sale by transfer of document of title should take place. Next condition. The first buyer should furnish a declaration in form C. First buyer is also giving. First buyer should furnish a declaration in form C to the first seller. Who shall charge CST at 2%? Who shall charge CST at 2%? Okay, next condition. The first buyer who is seller in the second interstate sale, should obtain even form from the first seller, and C form from the buyer, And what to do with all this? It should be filed with the assessing officer when he is asking. When you claim exemption, he'll ask. Next point. For similar subsequent sale, the dealer should obtain E2 form from the previous seller and C form from the buyer. Okay, let us quickly revise what happened here. Multiple sales are taking place. End consumer is nowhere in the picture. Wholesaler, retailer, these fellows are there. Many states are involved. First sale we are taxing, all other sales we are giving exemption, otherwise it will result in double taxation. But for the sake of exemption, we are putting some formalities. What are the formalities? From the seller take E forms, from the buyer take C forms. Submitted so that no fraud takes place. This formality they have put. Last exemption. Just heading you write. Exemption from CST. Exemption from CST when sale is to SEZ. Exemption from CST when sale is to SEZ. Okay, again what is this topic? See, SEZ is favorite again. So for them output tax is anyways not there. Whenever they do some sale outside India, there is no tax. But what about their input tax? For input tax also we are saying no need to pay. How to understand? There is SEZ in Andhra Pradesh. They are buying goods from Tamil Nadu. On such import there is no tax. This point says SEZ need not pay any input tax. Now quickly tell me what we have done so far. What is interstate sale under 3A and 3B? Then we have learned what are the exceptions to CST. Quickly revise what are they? First, import export, section 5. Then penalty paid, sale. Then subsequent sale. Then sale to foreign embassies, missions, etc. Sale to SEZ. Then interstate stock transfer. So if they ask you a practical question based on the principles, you should say, okay, because the conditions are satisfied, there is no CST on it. Okay, so you have to practice. We have some questions to practice. We'll do it. Now come to section 4. Okay, write down section 4. Don't panic. Don't look at the clock. Don't look at the watch. Remember, this is for your exam. And there are how many days left for your exam? Hardly 50 days, right? 60 days are there, huh? Okay, but still it is high time. You have to be serious. Chalo, now we are looking at section 4. Put the heading, sale outside the state. Sale outside the state. Okay, write down under this. Section 4 describes what is sale inside the state. See the heading and see what we are writing. Section 4 describes what is sale inside the state. Why we are discussing what is inside the state? Let's see. If you try to understand, what is the definition of a private limited company? Which is not a? Okay. So here also what we are trying to understand, sale outside the state means what? Whatever is sale inside the state cannot be outside the state, other way around. So instead of learning what is inside, what is outside, section 4 is telling us the following is inside the state. And once we say it is inside the state, that means it can never be outside the state. And we know CST is applicable only when the sale is outside the state. So now what do you mean by inside the state? Section 4. Write down. Sale of goods shall be deemed to take place shall be deemed to take place inside a state if small a specific goods underline, if the goods are within the state at the time when the contract of sale is made. Okay, now what do you mean by specific goods? Okay, it's like this here. I go to a shop and I want to buy chairs. Okay, so when I want to buy chairs, the chairs are made and they are ready. I can see them. So when you can see them, select them and buy them, such kind of goods are called specific goods. You've learned in CPT, Sale of Goods Act. Okay, so you learned and forgot? Great. So now what is it? So for specific goods we are saying at the time when the buyer is accepting and completing the contract of sale, if the goods are in the same state, then it is sale within the state. What about future goods? Future goods means what? I went to a furniture making company and let's say Sridhar has gone to furniture making company and said we want 100 benches. When the contract of sale has been placed, benches are not there, you can't see them. Okay, they are not visible, they are future goods. That means in future it will come into existence. Such kind of contract is not complete until and unless appropriation of goods has happened. If you remember, this was the language. What do you mean by appropriation of goods? The seller will, make the lot of goods, call the buyer and say, this is the lot, you choose. If you are okay with it, the future goods which you were talking about, we have made for you and this is ready. If you are interested, you accept. So, sale is complete at the time of appropriation of the goods to this contract. So, with respect to future goods, what are we supposed to do? Try to understand the situation. What is the situation? When the purchase order is placed, the goods are not in existence, they will come into existence in future. So now to decide whether it is a local sale or interstate sale, what are we supposed to do? What will the law say? With respect to future goods, they are saying, at the time of appropriation, is there any movement of the goods from one state to another state? If yes, then it is a CST sale. So see this one, what did we write for specific goods? If the goods are within the state at the time when the contract is made, it's a local sale. Now you write down for future goods. Future goods. If the goods are within the state, at the time of their appropriation to contract of sale, by the seller or buyer, okay, and see this, how will you read it? Read from the beginning. Yes, writing sale shall be deemed to take place inside a state. Under that we said for specific goods, then for future goods. Write down example for future goods. We just left with 2 topics for CST. Those who are in a hurry, tell yourself. Now, as of now, there are only 2 topics. One is what are the rates of CST and another one how to calculate turnover, on what value CST is attracted. So you may get a question on that, computation of CST. So 2 topics are pending. So don't worry now. I know butterflies, whatnot are going on inside. So write on example. Mr. A from Mumbai entered into contract. Mr. A from Mumbai entered into contract with Mr. B, entered into contract with Mr. B of Nagpur, with Mr. B of Nagpur to manufacture 50 chairs. Now see, this is a future good. The buyer is in Mumbai, the seller is in Nagpur. And we know that don't look at the people, look at the goods. That is important. And now when to look at the goods? At the time of appropriation. So what did the seller do? Write down. Mr. B manufactured the chairs and appropriates to contract in Mumbai. What does this mean? See, the chairs were ready. We did not say the buyer to come to Nagpur and select the chairs and accept them. Once the chairs were ready, this fellow took them to Mumbai and there he said, you accept. See, now sale will happen only when that fellow is accepting. And if he says, no, I'm not interested in the chairs, there's no breach of contract, because in future goods always the condition is sale will be complete only on appropriation. So at the stage of appropriation, if the buyer is not interested, there is no sale. So where is the appropriation happening? In Mumbai. Where is the buyer? In Mumbai. It's a local sale. It's not interstate sale. Okay, write down, this is a local sale. This is a local sale. It's not possible for us to go and read Sale of Goods Act basics. Okay, so that's why you have to manage. I know you're not convinced, no problem. Some topics you will not be convinced. Take them the way it comes. Right? So now next heading, rates under CST. Very important topic. For solving a problem, this is needed. Rates under CST. What is the rate under CST? Sure, it is 2%. Okay, now again you will get enlightened. See what we are discussing. We are saying, okay, people started talking. Very important topic here. I know, patience. See this now. CST rates. 2% or local VAT rate, whichever is lower. For this, conditions are concentrate. The buyer should submit C form. Very interesting it is. So what are we saying? The seller should apply the following rate. What rate is this? CST rate 2%. See, initially, olden days, CST was 6, then they made 4. They slowly, by the time we go to GST, it should become 0. But last 6 years, 2% we are following. So what is the concept here? We are saying the seller will apply 2% or local VAT rate, whichever is lower on the sale. So try to understand the examples now. So assume there is a CST sale. From Andhra Pradesh, goods are sold to a consumer in Tamil Nadu. From AP, goods are moving to Tamil Nadu. What rate should apply? So assume, see, 2%, whereas local VAT rate is assume 14.5 or 5 or 1 or nil. Now you tell me what should be the answer. Whichever is lower. No nil. There are different cases here. Small a is freezed. It is CST. 2% is not going to change. But local VAT rate can either be 14.5, 5, 1 or nil. Now so many, how many? 4 answers you should give me. 2% or 14.5? 2 or 5? 2 or 1? Okay, great. But now what condition is this? Buyer should submit C form. Now what do you mean by submitting C form? Who can submit C form? Registered dealers. That means the buyer is either a distributor or manufacturer or wholesaler or retailer. He is a person who is buying the good in the course of his business. He is not buying for personal consumption. He is not an end user. Such a buyer will submit C form. Only then this concept will apply. That means, let's say your father wants to buy a television. Option 1. He wants to buy it from AP, local purchase, let's say. What rate he will pay? Local VAT rate. No, somebody told him, no, buy from Tamil Nadu. Assume some example. He is planning to buy TV from Tamil Nadu. Okay, it is not practical. Why this example is not practical? All the way bringing it from Tamil Nadu, additional transport cost will be there. Near your house, somebody is selling it. So assume you are buying it from Tamil Nadu. It's a CST purchase. What rate will apply? Will they put 2% on you? No. What rate they put? What rate? Because this topic is telling 2% or VAT rate, whichever is lower, only when C form is given. When you and I are buying goods, we don't give C form. We are not registered dealers. We are end consumers. When we are end consumers and we don't give C form, what rate will apply on us? Even if we are buying from another state, VAT rate will apply. They will put VAT rate on us. Nobody will put 2% on us. 2% CST rate is for whom? Those buyers who are registered dealers who submit C form. You and I, if I buy from a different state, we have to pay the same VAT rate. Of course, the tax will be called CST, but the rate will be the same VAT rate. So that's why nobody will buy from a different state. Unnecessarily transportation cost will be there. It's better to buy within the state. Who will buy from different states? Manufacturers who are in the course of business, they need something, they may buy from a different state. You and I will not buy. Okay, so we finished learning. Did you copy this? CST rate. 2% or local VAT rate, whichever is lower, provided the buyer is submitting C form. Now last topic for the heading, variation under CST. Variation under CST. Okay, write down turnover. Turnover means aggregate of sale price. Turnover means aggregate of sale price received. Aggregate of sale price received or receivable in respect of interstate sale. In respect of interstate sale. Okay, next line you write down. Taxable turnover is equal to aggregate sale price into 100 by 100 plus R. Aggregate sale price into 100 by 100 plus R. They want us to do backward calculation. Just like in service tax, we said start with gross amount, same topic. Okay, so now next one. Write down exclusions and inclusions in selling price. Exclusions and inclusions in selling price. Important point, concentrate. Inclusions. Any sum charged for anything done, any sum charged for anything done by the dealer at the time or before delivery. So before delivering the goods or at the time of delivering the goods, we have charged something. Okay, examples, keep writing. Dharmada, that is charity. Dharmada, whatever you want, you write. Compulsory charity. Under inclusions, we are writing, you have to pay. Without paying this, they will not sell the good to you. Payment charges. Dharam kata. You see? Weighbridge will be there where they weigh the truck for you. They charge weighbridge charges. How do they weigh? Without the load, what is the weight of the truck? With the load, what is the weight of the truck? Minus it, that is the load weight. All that you have to pay weighbridge charges. Weighbridge will take. Okay, next one. Insurance charges. Insurance charges. In brackets you write, if it is not compulsory from the seller, if it is not compulsory from the seller, but given at the request of buyer, exclude. Okay, now quickly repeat. What did I say? If seller is saying compulsory insurance, whether you like it or you don't like it, I will sell the goods along with road insurance. Include insurance for CST. Seller is saying no, insurance is optional. If you want, I can arrange it for you. Then we are saying exclude it for CST. Because see, we want to learn whatever amount you are paying as a condition of sale, that is suffering CST. Okay, next point. Packing material. What are we reading? Inclusions. Under inclusions we are writing packing material. Packing material. But what if it is returnable packing? No, exclude. For returnable packing, what does they charge? Deposit. It's not an expenditure. They take a deposit from you. If you return it back, deposit will be refunded to you. If you don't return those containers in which it has gone, they will keep the deposit. But you have to include normal packing material. Returnable packing material, don't include. Excise duty. Excise duty. Okay, sometime back we did one problem. We took the final value, added excise, after excise VAT came. Same thing here. You take the value, put excise duty, after that CST will come. Next one, customs duty. Customs duty. What case is this? The seller of the goods has first imported the goods. He paid customs on it, then did manufacturing, he paid excise on it, finally he sold it to another state. Now CST is on all items, customs, excise, everything. Government subsidy. Okay, don't write this, this is coming under exclusion. Next one you write design charges. Design charges. Next one you write warranty charges. For warranty you write in brackets exclude if optional. Exclude if optional. What do you mean by that? You are asking the buyer, do you want 2 years warranty? If he says yes, you are giving, otherwise no. So if it is optional, it means it's not a condition for sale. Therefore excluded. No compulsory warranty, you are charging and giving warranty. Then CST is attractive. Okay, now to the list exclusions. Exclusions. Cash discount. Cash discount. Trade discount. cost of freight or cost of installation, cost of freight or cost of installation, where such amount is separately charged by the dealer, where such amount is separately charged by the dealer. Okay, this is quite interesting. Now I want you to pay attention here. What did we do when it comes to excise law? We said freight and insurance, there was no excise duty. Now for CST purpose, what are we writing? In case of CST, the following are to be excluded. Cash discount. For prompt payment, we will give. Trade discount. For good to business, we will give. Okay, on these discounts, there is no CST. That means, I see an example. 500 is the price, 50 is the discount. CST will be attracted on 450. Okay. Now we are discussing what about freight. What is CST law telling? Freight will be excluded from CST, but they are putting one condition. What is that condition? If you show it separately in the invoice. That means after this 450, if you put freight some 20 rupees separately in the invoice, then in that case there is no CST on it. But if you tell to the buyer 450 is the final price inclusive of freight and you don't charge it separately, then CST is attracted on full amount. So now you should advise your clients. You should say if you want to escape from CST, then please charge freight separately. If you do the mistake of including it in the price, then CST is attracted on full amount. Now what about installation? Again, see, installation is very interesting. Let's say somebody sold AC for you, 30,000 rupees. And they will say this AC, 30,000 is with installation. We will install it. 30,000 is inclusive of installation. The person will come to your house and fix the AC for you. Now CST is attracted on entire 30,000. Alternatively, the seller is putting a bill like this. He is saying 30,000 is AC, but if you want installation, you have to pay 1,000 rupees separately. Then in that case, on 1,000 there is no CST. Service tax will be attracted on that. So you have to check for two things, freight and installation. If it is shown separately, there is no CST on it. If it is inclusive, then there is CST on it. Okay, continue writing. Exclusions we are writing. Government subsidy. Government subsidy. You have to exclude. Sometimes see, government will say, if the product is selling for 100 rupees, government will say don't charge 100 from buyer, we will pay 20, you take only 80 from the buyer. When buyer is paying only 80, CST is on consumption and consumption is on 80 rupees, so CST is on 80. Government subsidy, exclude. Next one, put a star, very important. Sales return. There is no CST on it. Under exclusions only we are discussing. Sales return. Write down, there is a condition for this. It will be excluded. It will be excluded only if sales return is within a period of 6 months from the date of delivery. 6 months from the date of delivery. This condition is not applicable. This condition is not applicable if the goods are rejected. Okay, so now what happened? In the month of April, we did a CST turnover of 5 lakhs. Okay, and on this CST was remitted 2% to the government. But unfortunately, out of this 5 lakhs, in the month of May, we are doing further sales turnover of 6 lakhs rupees. But out of the previous sales of 5 lakhs, there is a sales return of 1 lakh rupees. So we are saying in the subsequent month, you can adjust this 1 lakh as a deduction from taxable turnover, and you can pay CST only on 5 lakhs. Because see, CST remittance is not happening on a bill-to-bill basis to the government. You do it for the full month on a consolidated manner. When sales return has happened, what will you do to the customer? You will refund the entire invoice price charged from him, including CST. You will give it back to him because he has returned the goods. When you give back to him, you will ask the government, you will say, sale did not happen, there is a return, I refunded everything, why don't you give me adjustment? So in the month of May, government is allowing you to adjust this sales return. Like this, they want to give you exclusion, but what condition they are putting? It should have been returned within how many months? Within 6 months. After a year, if you want to subtract like this, they are not entertaining. But this condition is not applicable in case of sale or goods which are rejected. Now what do you mean by rejected goods? What's the difference between return and rejected? In case of return, sale was complete, they accepted the goods, maybe later on based on the technical inspection etc. They said no, it is not up to that mark, we want to return it, we are not interested, and they sent it back. But in case of rejection, sale itself did not happen. When you wanted to give the goods, the buyer refused to take it. He is saying, I am not interested at all. So either because totally there is breach of contract, that could be one reason, or without any match, the specifications were not matched at all. The quality was so pathetic that that fellow didn't even accept. So when he didn't even accept, sale itself was not complete. When sale is not complete, do not call it sales return, call it rejection. And for rejection, 6 months condition is not applicable. Any time it can happen, no problem. So with this, we finished understanding concept of turnover. Now we will quickly solve the examples and understand. Come to your hand up. Have patience, we will finish it. Specifically excluded from the definition of goods, therefore no CST. Newspaper is specifically excluded from the definition of goods, therefore no CST. Okay. See, some theory topics I haven't done. Take for example, who is a CST dealer? What is a CST dealer? We said van dealer is a person who wants to do a sale in the local area, so he has to get registered if his turnover is more than 5 lakhs. Now who is a CST dealer? CST dealer is a person who wants to do sale in the course of interstate trade. However, the limit of 5 lakhs is not applicable. Even 10,000 rupees worth goods if you are selling, you are subject to CST. There is no basic exemption, there is no small dealer, nothing. Every rupee sold by you right from first rupee becomes taxable. And when you are selling, profit motive is not important. You can be a charitable organization and you can do sales. Even in that case, CST is attractive. So see, this place of business include place of business of agent. Right there, answer is yes. You have to refer theory for that. Yes. Agent place also you have to look at. And profit motive is essential. Answer is false. Profit need not be there. Even charitable organizations are taxable. CST is leviable on transaction of leasing of asset. Yeah, write down deemed to sale. You have to refer to the definition of sale. It is deemed to sale. Okay, this after you read theory you will get an idea. Question number 3. Concentrate now. X of Kolkata sells goods to Y of Chennai. 2 states are involved and hands over the goods to transporter for transporting them to Chennai. The lorry receipt is sent to Y by post. While goods are in transit, Y sells the goods to Z of Vijayawada by endorsing the lorry receipt. Okay, so now there is transport of goods by transport or document of title. The goods are diverted. X, Y and Z are registered dealers is the second sale between Y and Z chargeable to tax. Okay, now see there are 2 things here. Do not get confused. When we are solving the questions, first approach is find out if it is a CST sale. In order to answer, go by 3A or 3B. After you find out that it is a CST sale, then you find out is it exempt? Because we have learned a list of exemptions. So is it covered under section 6 subsection 2 subsequent sale? So first is it a CST sale? Yes. Second one, is it enjoying exemption under 6 subsection 2? So write the answer for this. The first sale by X to Y is subject to CST. Subsequent sale by Y to Z is exempt under section 6 subsection 2. What are the conditions? Write down first one. As the following conditions are satisfied. As the following conditions are satisfied. First one. What happened? First condition. Sale is by transfer of document of title. This is important. Sale is by transfer of document of title. Next one. And the buyers are registered dealers. Buyers are registered dealers. Because if they are not registered, they don't give C form, we can't give exemption. Okay, next question. Fourth one. Mr. A of Chennai sent a consignment of goods to his branch without any prior contract of sale. Pre-existing contract is not there. When the goods were in transit, Mr. B bought the said goods from A's branch. A's branch endorsed the railway receipt in their favor and that fellow took delivery. Is it subject to tax? Law is putting a principle. Before the movement of goods, whether there is a contract. No. That means even during the transit, if a contract comes, no problem. Why did the goods started moving? Is there a contract behind it? No. In the transit, there is a contract. So therefore, there is no CST on this. Local VAT rate will apply. Whatever sale is happening in that state, that VAT rate will apply. So please write down here. The transaction is an interstate to stock transfer. The transaction is interstate to stock transfer. As there is no pre-existing contract, before dispatch of goods. As there is no pre-existing contract before dispatch of goods. This is important. After dispatch of a contract has come, no, that's not important. Okay, look at this. B of Delhi comes to Hyderabad, purchases certain chemicals from E and transports them in his own name to Delhi. See, once he has purchased and the sale has been completed here itself, he did not tell to the seller, please send the goods there, then I will check, on examination I will accept. All that he didn't say. He took the ownership of the goods in Hyderabad itself. Once he took the ownership, the sale was complete here. After the sale was over, he took his goods and went to his state. So this cannot be an interstate sale, because interstate sale says there should be a contract which results in movement of goods from one state to another. Where is the movement here? Contract got over, then there is a movement. So write the answer. The sale is completed. The sale is completed at Hyderabad itself. The sale does not occasion movement of goods from one state to another. Sale does not occasion movement of goods from one state to another. Therefore, no CST. One. Exo Mumbai sends goods by air to his branch at London. Mumbai to London. Export is happening. Subsequently, he transfers the document of title of such goods to a buyer in Scotland after the goods have crossed custom frontiers of India. They crossed Indian water, then we are transferring. What case is this? Sale in the course of export. Write down sale in the course of export. Direct export as well as this export, both there is no CST. Sale in the course of export. No CST. Next one. A London-based entrepreneur enters into contract of sale with Madhav of Gujarat. From London, goods are coming to Gujarat. What case is this? Import. Write down import. No CST. Okay, next. Examine whether CST is leviable on the following. Interstate sale of electrical energy. No. Next one. Someone is a dealer of textile in Vapi. Madhav of Lucknow approached him and purchased the goods worth 1 lakh. However, instead of taking the delivery of goods in Vapi, he directed someone to deliver the goods in Surat. Okay, now please understand this needs some general knowledge about cities. You should be knowing that Surat as well as Vapi both are in Gujarat. Okay, now we will read. Concentrate again. We'll read the question again. Someone is a dealer in Gujarat. Madhav of Lucknow approached him from a different state and purchased goods. Instead of taking the goods in Vapi, he said, please give it to me in Surat. So somebody from Lucknow came to Gujarat and said, I don't want to take the goods to to Lucknow. Please give it to another city of Gujarat. So seller is in Gujarat, buyer is taking the goods in Gujarat itself. Even though he came from Lucknow, goods are not going to Lucknow. So what is this? Local sale. So write down. It's a local sale as there is no movement of goods. As there is no movement of goods from one state to another. As there is no movement of goods from one state to another. Remember, Surat and Vapi both are in Gujarat. Goods are lying in Gujarat itself. Okay, discuss the following. Cost of freight separately charged in the invoice shall be deducted. Yes. We said fried, take it separately, exclude it, exclude. Subsidy given will form part of sale price, false. You write there exclude, exclude, subsidy should be excluded. Charity will not form part of sale price, false, include. Buyer has to pay charity, so include, whatever buyer pays, include. Free cost of material supplied by customer will be added to the sale price. No, because this is free. The statement is not valid. What shall we write? It shall be excluded. Excluded. See, he is bringing some material, so why to include? What example is this? Try take an example like this. See, let's say I want somebody to make some t-shirts for us. So we don't trust that fellow. So we said we'll give you the thread, you make the t-shirt and sell it to us. So if you give the thread, the law is telling CST is not attracted on thread because it is free of cost, supplied by you. Okay, next one. Read the 8th question. Now this is a practical question. We'll quickly finish it. Concentrate while reading. Total interstate sales. Okay, CST is not shown separately. What does this mean, total interstate sales? It is invoice value. It includes the following, dharmada. Let it be included because that has to suffer due. CST put a right mark. Okay, then freight. Yeah. With respect to freight, what condition we have learned? Signal, it is not detecting the signal, no green color. one complaint you will always have is about AC. Okay, but old students, I think you are